Funding for Market Journal is provided by the Nebraska Soybean Board.
Animal agriculture is vital to Nebraska. Livestock production not only contributes to our food supply, but also helps our rural communities. Livestock provides revenue for schools, creates jobs, supports Main Street, and enhances the future for farm families. The Nebraska Soybean Board's Animal Agriculture Initiative works to encourage growth of responsible livestock enterprises to benefit agriculture and Nebraska.
Market Journal, television for making agricultural business decisions, is a presentation of the University of Nebraska-Lincoln Extension, where you can know how, know now. Promotional support is provided by the Nebraska Farmer magazine, and major funding for Market Journal is provided by the Nebraska Soybean Board. The Soybean Checkoff, growing opportunity from the ground up.
Welcome to this week's edition of Market Journal. I'm Jeff Wilkerson. On this episode, Roy Smith looks at how corn and soybean markets may hold up before the fall harvest. Tina Barrett discusses narrowing margins in those grain markets. We'll look at the presence of southern rust in Nebraska cornfields. Brad Lubben outlines paths for a new farm bill, and Robert Tigner analyzes dairy markets. Roy Smith is our marketing analyst this week. As of this taping, corn and soybean markets were continuing to struggle in regaining some of last week's losses. Overall crop conditions remained largely unchanged from the last progress report, but in Nebraska, the gap between irrigated and non-irrigated corn is continuing to widen. Irrigated corn conditions rated 78% good or excellent compared to the average of 74%, while dryland corn is rated only 40% good or excellent, 24 percentage points lower than the average. As a large chunk of Roy's home area of Plattsmouth is non-irrigated, we started our discussion Thursday morning by asking about the current crop and moisture status.
The moisture situation's pretty desperate. Actually, it's been over a month since we've had a substantial rain. We did have 8 3/4 inches of rain from the end of May to the end of June, so there was some subsoil moisture, and actually the corn and beans still look pretty good. They are dry, but the corn is pollinating, the beans are blooming, and so we just don't need any more hot, dry weather right now.
The last time we talked was towards the end of June, and you had sold out of corn and soybeans, so last week probably wasn't as tumultuous for you as it was for others, but how do you think the market has responded this week?
Well, first of all, one of my rules of marketing is never hold corn or beans, cash corn or beans, past the 1st of July. And as you say, I was out of them by the time we did this the last time.
I tapped your bins just to make sure,
too. Yeah, okay, no surprises.
No surprises.
So, you know, that principle has held true for me for many years. Very seldom does it cost me money. In terms of the new crop, I don't have any new crop sold. That right now, that looks like a mistake. Like maybe we should have sold a little bit, even though the price wasn't where we wanted it to be. But you know, that's one of the parts of this marketing game. Sometimes you just don't get it the way you'd like to have it.
So are you aggressive trying to sell into that now, or are you waiting for a bit of a rebound?
I'm waiting for a rebound. This week I updated my long-term seasonal charts in corn and soybeans both, and soybeans especially, but also corn to a certain extent. From about now until around the 1st of September, we usually see a fairly good rally, what I call the frost scare rally. And actually that runs from about the 25th of August to the 10th of September. So if you have anything that needs to be sold, especially what I'm saying is new crop corn or soybeans that are going to go to the elevator at harvest time, the next month is the time to look for a rally and maybe even a little bit of a bump in the basis, because the old crop basis has been awfully good. The new crop basis is so-so. I would hope that the new crop basis would maybe give us a little bit of a rally as well.
What are you seeing? You also mentioned before that maybe December would be a place that the market or the charts might show a bit of a rebound.
On the long-term seasonal chart, we really see three relatively reliable price peaks. One of them comes in April, May, and June for a new crop. The second one comes this last week in August, first week in September, what I call the frost scare rally, and then starting with the harvest low, which is normally around the first week in October, we get a gradual up trend that I call a dead cat bounce, and that for sure is a time to be making some sales. Whether or not you've got some already forward priced, that is a time to make sales, because normally the basis is improved. Normally we get a little bit of a rally in the futures market, and the bonus is you know how many bushels you got because harvest is over.
There is that frost scare that's already out there. If you read a lot of market analysts, there's a little blurb about it that maybe there's some trouble, not necessarily here in Nebraska probably, but maybe as you go further east to some of those fields that were later planted. If you had old crop, would you hold on to it to try and find something there?
If you have old crop, you're going to be playing Russian roulette with the market, and yes, occasionally you'll see, like as in 2012, you'll see that market rally all the way into the first week in September, and then from there on also, and people who stored grain all the way through the summer and had it to sell then did pretty well. That's about a 1 year in 10 type of strategy, and I hesitate to recommend anybody to do it. You do it, but understand what the risks are.
Next week, University of Missouri Extension ag economist Ron Plain will join us to look at hog markets. The record price for corn on the futures market was $8.31 a bushel, set on August 21st of last year. The highest historical mark for soybeans was set August 30th, 2012 at $17.70 a bushel. After last week's mess and with a big projected crop on the horizon, both the old and new crop contracts are more than a few steps from the top. It would be hard to imagine a producer not making a profit if he or she sold at those records, but if 2013 costs are close to 2012 inputs, the break even for this year's corn and soybeans might make profitability closer than you think. Tina Barrett from Nebraska Farm Business joined us Wednesday to discuss what those margins might look like.
We went back and looked at what our 2012 costs were, because that's the best measurement we've got right now. And on average for corn, across all types of tenure types, we averaged $4 a bushel for total farm costs. That was just farm costs. That's, you know, inputs, depreciation, utilities, but doesn't include a charge for family living or taxes. And so that, you know, that's something that we got to figure out, like, for looking at not only breaking even from net income standpoint, but also making a profit, not showing a net worth loss. We need to factor those in, and then, you know, we're talking a little higher number.
The 4 is the average.
4 is average, and so that's another thing that you got to remember, is that when we're talking about an average number, is that half of the farms that we work with are lower than that, and half of them are higher than that. And so when I separated them out to the top 20% and the low 20%, we saw a $1.70 difference in there between $3.60 for the top 20% and $5.30 for the low 20%. And we actually would have 40% of the farms that we work with that would be losing money at today's crop prices.
Well, right. I mean, $4 would leave a lot on the bone for last year, but if you look at 2013, with the way the market is now, and presuming that there's a big crop, the input prices probably don't go down that much.
That's right. Yeah. You know, we saw high incomes in 12. We'll see what 13 is going to bring. You know, I just don't see we're going to see that kind of profit, and how we're going to, unless the market rallies a little bit after harvest, that we're going to see that. And so it's something I think people need to be prepared for. And as they're starting to make input decisions for 2014, they need to start thinking about that too. Is there any way that they can reduce some of those costs to help them out? So
that's in corn. As you looked at the 2012 numbers for soybeans, what were the things that you saw there?
Yeah, for soybeans, our average was $10 a bushel, which doesn't sound so bad, except when we're talking about so many less bushels per acre. Instead of in corn, we were adding about 70 cents for family living and taxes. And in beans, we're talking about $2.30. We're bringing it up to $12.33 if you include all family living and taxes charges. So we're talking about a big spread there.
Yeah, and after the market eroded last week, that doesn't leave much available.
No, it doesn't. And we're assuming that, you know, we're not seeing any significant drops in any input costs or family living and taxes for this coming year. So, maybe we haven't saw dramatic increases either, but I think those numbers are pretty solid.
If you're a farmer and you're just kind of you're not working necessarily with a group or cranking the numbers out, what is something that would be easy to start with, or what would be a good way to start figuring out a cost of production?
Yeah, well, if it's a strictly grain operation, it's usually fairly simple. Something that you can plug into a spreadsheet and plug your total cost for the year. And then maybe look at seed and fertilizer and chemicals, and maybe even crop insurance on a corn versus beans basis, because those are the big things that would vary. And try not to get down to too nitpicky with utilities and insurance, because it's not going to make a huge difference as you're splitting that out. If you've got a livestock operation, it makes things a little more complicated, and that we have to decide how much of that fuel went to the livestock operation, how much of it went to the crop operation. But if you sit down, with your total numbers, you can do that. I think the important thing to do is to make sure that we're not just looking at your tax return, because you might have 2 years worth of fertilizer paid for in 1 year, and you need to come down to the cost for that actual year.
The question I would ask then is, so if you figured out your break even and it's $4 and you've got everything in there, do you sell for $4.10? Do you sell for $4.20? Right? What level do you look at before you're getting too greedy?
I don't know. That's a tough decision, and marketing is such a hard thing to do. I think the thing is, if you're looking at being 5 or 10 cents away from the market price and being above it, it's time to be cautious with what you're spending, and maybe not so much looking at. A lot of your 2013 crop costs are going to be in the book. But maybe looking at 14 and saying, okay, is there anything that I can do to cut my costs to lower that and give myself a little bit more wiggle room?
Tina will join us again next week to look at tax preparations after years of record high incomes, as well as how operations can get ready for new health care laws. UNL educators are reporting the presence of southern rust in several south central and southeastern Nebraska counties. UNL Extension plant pathologist Tamra Jackson-Ziems says the severity isn't widespread, but that could change with the recent damp and cool conditions.
Southern rust is a very aggressive pathogen, and we have little to no resistance to this disease in our contemporary hybrids, and we have a lot of corn that's late planted and going to be more susceptible. We recommend looking for those tan to orange pustules out there, and these are smaller than common rust, and the spores will be produced mostly on the upper leaf surface. For southern rust and common rust, our foliar fungicides do a good job. The most important thing, though, is getting it on time. And so not letting it get ahead of you and not putting it on so early that you lose the protective value they have.
Tamra says all hybrids are susceptible, so producers, especially in southern counties, should be scouting cornfields intensively. If you're unsure of southern rust and need confirmation, you can send a sample to the Plant and Pest Diagnostic Clinic here at UNL. Members of Congress are currently on their summer recess. They'll return to Washington after Labor Day. Those in agriculture hope one of their first tasks upon arrival is progress on a new 5-year farm bill, since the current extension expires September 30th. We talked with Brad Lubben Wednesday to look at the chances action happens before the deadline and what lawmakers need to do in order for some sort of movement to take place.
It's interesting and frustrating at the same time. The House did pass its farm-only version back the second week of July, and there was talk of, okay, we're ready to go to conference. Well, no, the House wants to push a nutrition-only bill so that they have a voice on that as well, but that didn't happen in July either. We're waiting until after Labor Day when Congress comes back in session, and looking for either quick action on a nutrition bill that's to garner predominantly Republican support, such that they can move to conference with a full voice, or a plan that simply says let's get to conference and negotiate it there.
What's the hang-up for the nutrition bill? Why does members of the House, why do they want to get this nutrition bill through at the same time?
Well, certainly the House Republican leadership does want a position on nutrition going into conference committee with the Senate. When the bill failed in June, including both farm and food provisions, it was the food provisions that simultaneously cut too much to satisfy most of the Democrats, but didn't cut enough to satisfy the right wing of the Republican Party. So stripping out the food provision, we did get a farm-only provision or a farm-only bill through in July, but that suggests there's no official House position on nutrition, and that leaves us sort of wondering where negotiations start. The challenge now is the House wants a nutrition position. To get a nutrition-only bill through, it probably leans further right and does even more cuts than what failed back in June. But that's only to get to negotiations with the Senate, where the final product will probably be left of where they failed in June.
And they don't get there until September when they come back from recess.
They don't get to start that discussion in earnest until September, with little chance that we'll get it done by the September 30th, nil chance that we'll get it done by September 30th.
Which means, again,
we get to talk about permanent legislation. Recall the House Farm Bill would actually repeal the old permanent legislation and update it with new, but that doesn't count now. In the meantime, we still have the 1949 permanent legislation.
Okay, this is not an extension to what is currently in place. It is back to 1949.
If nothing is in place by the end of September, theoretically, we immediately return to permanent legislation of 1938 and 1949. We ignored that last year up until the end of the calendar year, because for about 3 months you can sort of pretend that permanent legislation doesn't exist because it affects the next crop, not this crop. Well, that's the 2014 crop, and the first official crop is milk, which gets harvested every day, including January 1st. That's why the end of the year suddenly became the milk cliff, and very likely, again, we'll be talking about the milk cliff before we finally see a product in the shape of a new farm bill.
What's the best case scenario do you think of when there is actually a new 5-year farm bill?
If I'm optimistic, as I've been for 3 years now.
And what have you learned, Brad? What have you learned?
I'm still optimistic based on the premise that eventually we know it's got to get done. And simply extending it without reforms doesn't satisfy any of the movements out there. So the optimistic scenario says we don't get it done in September, but we do get the negotiations started in earnest, such that we have a full bill ready to go in December that can be voted on and passed before the end of the year milk cliff hits us.
Senate Majority Leader Harry Reid has said the Senate will not pass another temporary farm bill extension. Whether or not that's true will be seen in September, but Brad says we could go past the deadline without immediate crisis on October 1st, just like we did in 2012. This year's Soybean Management Field Days will show updated research and give you a chance to win 300 gallons of biodiesel. UNL Extension educator Keith Lewin explains the benefits of attending the 2013 Field Days near Minden, York, Pierce, and Waterloo.
If you recall, last year we implemented replicated research plots at these farms, at these locations. We felt since we were planning demonstration plots, let's just go through a little more effort and investment and plant replicated research studies. And so we're doing that again this year, and we'll be sharing some of the results from last summer's field day at these sites. Nebraska has quite a diversity of growing conditions, and from east to west, and so to be able to conduct research on a farm level in these different growing regions is really priceless if you think about it, because the way we grow soybeans here in eastern Nebraska is certainly different than the way they grow soybeans in the west central part of the state.
The 2013 Soybean Management Field Days begin August 13th in Minden, then move to York August 14th, Pierce August 15th, and finish near Waterloo August 16th. Topics range from irrigation management to row spacing, as well as a look at Nebraska's livestock industry. Admission and lunch are free and sponsored by the Nebraska Soybean Board. We'll link to more detailed information on the Market Journal website. Over the past decade, Don and Ron Jesperson have planted more than 1 million trees. In the August Nebraska Farmer, you can read how the two passed that large number. The trees serve as field windbreaks for their crops of dryland corn, wheat, millet, and field peas. The local offices of the Upper Niobrara White NRD and the USDA's Natural Resources Conservation Service provided technical and financial assistance to the Jespersons in their tree planting efforts. Don and Ron's great-grandfather began the tree planting heritage in the 1930s, and the following generations continued it. You can read about their love of trees in the August Nebraska Farmer. As you heard in our earlier Farm Bill discussion with Brad Lubben, dairy producers will likely be against the wall again after a Farm Bill extension expires at the end of September. Robert Tigner said when we talked Thursday that dairy policy is always controversial, and that came to the front during the latest discussions. We started our conversation with Robert by asking about the state of the dairy industry as producers continue to face high input prices.
Well, it hasn't changed much since last summer, at least with respect to costs. The budgets that I put together for the Iowa Nebraska dairy model indicates it's pretty much the same for their financial status. It has been improving somewhat recently, but unfortunately milk prices have also weakened a little bit. There is an expectation in some of the people in the market, in the dairy market, that prices are going to remain fairly stable for where they are right now. And so that would lead us to think that declining feed prices and stable milk prices will probably add some income to dairy farmers.
There's some relief on the horizon, so to speak.
Yeah, it looks like there is some relief on the horizon right now. But one of the things that is happening is that the last couple of months, the May and June milk production report indicated that milk production across the reporting dairy states is a bit higher. Last June, I should say, is the most recent report. It was up 1.6%, and the May report was indicated up a little bit higher than the preliminary result as well. So we may be seeing some more milk production, and that could drive prices a little bit weaker if it continues.
The Restaurant Performance Index is a measure that livestock producers could use to kind of gauge what the consumer confidence or consumer spending is like in the restaurant industry. As it relates to dairy, what can it show you?
Well, I like watching the RPI because it is one of those indicators to what is happening in the economy. The better performance of the restaurants means that there's probably a better economy coming or occurring in the present. And 70% of Italian-style cheeses is typically used in those restaurants and institutional settings. That indicates to me if that index is going up, and which it has been recently, that there's a bit stronger economy. That should indicate a little bit better dairy sales in the U.S. economy.
Odds are that there won't be a new farm bill by the time this current one expires, or by the time this current extension expires at the end of September. For dairy producers, it's probably more relevant than in any other industry. Where do you stand on that right now?
The MILC, or Milk Income Loss Contract, was extended by the past extension, and that payment has added some income to dairy producers recently. It will expire the end of September, and a new policy had been put forward that would move us in the dairy industry towards an income insurance policy. And there was also a supply component to that policy. An amendment did replace that supply component. We really don't know what's going to happen with dairy policy. The expectation was really that this farm bill would pass with that supply control, but it did not happen.
That was only a portion of our interview with Robert. You can see the full version on the Market Journal website. Now with this week's weather forecast, here's UNL Extension State Climatologist Al Dutcher.
Well, folks, here we again for the weekly forecast. During this last week, we did see thunderstorm activity almost every single day of the week during this last 7 days, with the major precipitation events between the Sunday night through the Tuesday morning time frame, and then again we see the redevelopment as we got into Thursday, and that carried on in through yesterday. Some very extensive rainfall across portions of southeastern Nebraska, southern panhandle. Again, then on Thursday, we've seen that redevelopment across north central Nebraska, and that all filled in across northeast and eastern Nebraska. So a lot of areas received a couple inches of moisture, but then some areas did miss out on the beneficial rainfall. As we go forward to this next week, it does look like we're going to see very active pattern as we are stuck between this trough to the north and then of course the ridge to the south. So all of the storms are favored across the central plains as they follow the monsoonal flow and they move in an east-southeasterly fashion in this northwesterly flow. It's going to make it very difficult for exact timing of precipitation events, but essentially the models are indicating daily thunderstorms. So for today, we're expecting thunderstorms to develop across the panhandle. Some of these may try to slide eastward, but they're going to fall apart as they get into eastern Nebraska, so we're only looking like isolated chances. And as we get into tomorrow, we're going to see another round of thunderstorms, and this one, because this trough is trying to sag a little bit toward the south, looks like it's going to pull some of that thunderstorm activity all the way into eastern Nebraska during the overnight hours into Monday morning. Now, as we get into Monday, we will see that several pieces of energy are going to rotate around the southern periphery of this trough, giving once again decent shots of moisture across northern Kansas and southern Nebraska, less so as we get into northeastern Nebraska. Time we get to Tuesday, a couple pieces of energy again are going to follow the edge of this periphery of this ridge, and that targets southern Nebraska and northern Kansas with some isolated thunderstorm activity possible across portions of northern Nebraska and the Panhandle. By the time we get to Wednesday, now this trough tries to push back a little bit farther and bring some cool air into the northeastern part of the state, but that's going to push that moisture up against the front range of the Rocky Mountains, and we should see some decent convection break out across the Panhandle, moving toward southeastern Nebraska during the overnight hours, and then as we get into Thursday, some of that moisture will lift up toward the northeast, and we may see some isolated thunderstorm activity across the Panhandle. Now, as we get into Friday, very cold air starts to push in toward the northern plains and eastern Nebraska. We could be looking at highs that are at least 20 degrees below normal on Friday. Early signs of fall, unfortunately. So let's take a look at the numbers. Right now, the models are projecting it will stay in the 80s across much of eastern Nebraska, pushing down into the upper 70s to upper 70s, then upper 60s across northeast Nebraska. We're showing 90s across southwestern Nebraska. That may be a little bit overdone by 4 or 5 degrees depending on the cloud cover, but you'll see the daily chances of thunderstorm activity. Now, as we go forward from next Thursday to the following Tuesday, that cold air still remains in place. And here's a new one we haven't shown very often this summer, a broad area of above normal precipitation, so it does look like the moisture will continue into the foreseeable future.
Thanks, Al. As always, today's interviews from this show with Roy Smith, Tina Barrett, Brad Lubben, and Robert Tigner are available individually on the Market Journal website and through the Market Journal mobile app. Next week, we'll look at tax preparations with Tina Barrett. Ron Plain will be our marketing analyst, and we'll report from the herbicide-resistant weed management field day in David City. Until then, thanks for watching. I'm Jeff Wilkerson. We'll see you next week.
Join Market Journal online at marketjournal.unl.edu. You can also follow us on Facebook and Twitter. Promotional support is provided by the Nebraska Farmer Magazine. Funding for Market Journal is provided by the Nebraska Soybean Board. The Soybean Checkoff, growing opportunity from the ground up. Market Journal is produced by the University of Nebraska-Lincoln Extension, where you can know how, know now. Funding for Market Journal is provided by the Nebraska Soybean Board.
America's export of soybeans helps the U.S. maintain a positive agricultural trade balance. Nebraska contributes half of its soybeans for export. The protein and oil content in soybeans enhance the growing demand for higher protein diets. The Nebraska Soybean Board promotes research to develop new soybean varieties with higher protein and oil content for major agricultural markets. The Nebraska Soybean Checkoff, growing opportunity from the ground up.